Hey everybody, welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And today we're going to get into the market sell-off that occurred yesterday. So big sell-off yesterday, markets down across the board. Russell was down over 3%, NASDAQ down over 3%, S&P down 2%. Now, the semiconductors were really the culprits here. Listen, everything was overbought. Granted, the markets have rallied off of that August 5th low tremendously. But what we're looking at here is the semis, the questions about the economy, about demand for the chips, all of that starting to resurface. In addition, I said this yesterday in Trading the Close, but I think the big traders, the institutional money, they were off for the second half of August, right? So they were on vacation. They came back yesterday and they said, sell it all. Sell it all. Get it done, right? So that's what we saw there. Today, we are seeing the markets down a little bit this morning pre-market. Not a big sell-off. I do want to cover the Nvidia story here as well. That's a big one to talk about. But basically, what we're seeing right now is that we have a move from yesterday's close right here. We're down ever so slightly this morning. So down about $1, give or take, on the S&P, or the spiders, I should say. That's about 10 points on the S&P 500. Now, ultimately, are we going to go lower? The answer is net yes, but that doesn't mean we won't have a little bit of a bounce today. I wouldn't be surprised if the markets close net positive or flat on the day. I also think tomorrow could be a flat day ahead of the jobs report on Friday. Remember, non-farm payrolls Friday morning. 8:30 a.m. I'll be covering it live here on the Game Plan. All right, so that's what we have on the S&P 500. Just flipping over to the daily chart here just so we can get our bearings. What we can see right here is that we had a big down day yesterday. We were consolidating here. The biggest issue with this chart pattern is that you were starting to make a bullish consolidation flag pattern. This basically kills that pattern. One of the methodology points that I teach you guys is that when you have a bullish pattern and it fails, oftentimes the results can be a bigger move to the downside. So while I don't necessarily know if we'll get that big move today, tomorrow, but I do think whether it's Friday on the jobs report or next week, that bigger move is coming to the downside. So just be ready for that. And again, a lot of this is coming into the questions, right? The questions about the economy. And this is something that I've been saying. The Fed's been spouting their soft landing, no landing. The analysts on TV, they've all been talking about it. I don't buy it because history shows us that that's not the case. All right, there are countless charts that show us that, number one, the Fed has almost never engineered a soft landing. Number two, when you've had an inverted yield curve, that when it uninverts, which we're literally at 0-0, right? So the 2 and the 10-year yields are even right now. We're just about to uninvert. These are the signals that tell us the recession is coming. So I'm still in the camp that the data is what I believe. I don't believe the talking heads, nor do I believe the Federal Reserve. So having said that, we do have a failure of a bullish pattern right here. While we could get a little sideways chop, I ultimately think we are headed to the downside. Remember, in yesterday's game plan, I talked about the Dow Jones Industrial Average, the logarithmic chart going back to 1899, and we are butting up against that trend line that even connects through the Great Depression, the pre-high from the Roaring 20s before the crash in 29 and the Great Depression that follows it. These are signals that you can't ignore as a trader. So you got to be on point here, guys. You got to pay attention. Okay. So what else do we have here? Where could we go? Well, again, ultimately, the bigger move to the downside is going to take us down into this level here. If we take a look here, we can just do some simple connection of pivot lows. We can clearly see that there is going to be support around 526. If it breaks that, you have additional little minor support here around 516. But once you take out this area here, this is where you have to start getting concerned about a bigger drawdown, right? So again, those two levels will be short-term support. If we take this high as well and we draw a trend line across, it's basically right in that same area. So there will be a lot of support in this area on the SPY, but should that break, that's when the floodgates open and things get very messy. All right, so that's where we are right now. As we go in on the SMH, we can take a look, but let's look at the Nvidia chart here. I want to scan through this real quick. All right, so Nvidia this morning, it is down here. So if we take a look here, guys, as we scan in, we can see that, again, Nvidia holding steady, but just down a little bit. So we're trading around 106.50. We closed at 108 yesterday. Yesterday, folks, on Nvidia, it was the biggest market cap loss ever in the history of one single company in one day. $279 billion evaporated just from Nvidia yesterday. Huge move. All right, unprecedented move, but this is the type of market we're in right now. All right, so what are we looking at here? If we look at Nvidia, what was the culprit? So yesterday, Nvidia fell, and it fell, and it fell. There were really no bounces. After hours, the DOJ announced a subpoena for Nvidia. Right, so basically the monopolistic tendencies, it's basically an antitrust thing. Are they doing the right thing? Are they distributing equally their chips? Are there any shady things going on here? I posted this yesterday on the website, but I would just say to people, do we think that this is legit? I mean, maybe, but does it really matter? And the answer is no, it doesn't, in my opinion. The reason why it doesn't is because if you're a mega cap company like Apple, Microsoft, or Google, you've already it's almost like a rite of passage. Every company out there of this magnitude gets looked at for antitrust practices. And honestly, a lot of them get fined. You know, they get the slap on the wrist, the random, $5 billion fee or penalty, and then they go back to doing what they've been doing, right? So I don't really think it's that big of a deal, but it does tell us why yesterday Nvidia was falling so sharply on the back of some decent, there was some negative news in the semiconductor index. There was some talk from some analysts that there was a slowdown taking place. But overall, 10% drop, $279 billion. That was because news leaked out. And again, you have to look at the government for that because, again, it was someone in the government that probably passed that news along to someone else, and it kind of spread throughout the institutional base going into this news. And I just point this out because I do want you guys to understand that verified investing is about equaling and leveling the playing field. And I'm going to call out bad actors and bad situations, and this was a classic case of insider news leaking out ahead of time, getting into the market, and then taking Nvidia down throughout the course of the day. And then after hours, the news hits. And yeah, Nvidia did go a little bit lower, but overall, now the news was out. It was factored in yesterday. The stock is down about $1.50 or so in the pre-market, not a huge move. All right, so that's where we have on this chart. Now, looking at the daily chart of Nvidia, what do we have? I have a level I'm watching today. I'll be watching this with the live day trading room. Today, we have a gap fill right here at around 104.75. So I'm going to be watching that level right there. And then if we continue down just below 100, there's this upsloping trend line right there as well. So there's two key levels of technical support. Now, are these day trades? Yes. They're not swing trade levels. There's no way I'm going near Nvidia on the long side of a swing trade, just as we're starting to potentially see the economy slow down, maybe chip interest slow down, AI interest slow down, all of those type of things. So just be aware of that. Only day trading, looking for opportunities here. Now, let's talk a little bit more about what else is going on. So if we look at the pre-market action here, we do have some big movers. We have Zscaler. Zscaler is a cloud cybersecurity play. This stock reported earnings yesterday after the bell, a massive drop to the downside. Look at that drop on Zscaler. All right, so the stock again is trading around $160 after closing around $190 and change. That's about a 17% drop in the stock. Let's flip over to the daily chart and look at what we have here. Okay, so let's see what we have. So number one, as we zoom out, we can see very clearly that we have a level here that's going to be high risk, but there is an opportunity here. So this would be a day tradable level, but very high risk. I'm not even sure if I'll take it, but it's around 154. The way I'm finding that level, you can see this base right here, and it kind of kisses this line here and right here at 154. All right, so that again would be my first level. It's about $6 lower than the current stock price. The one caveat I just want to throw out to you guys, the best traders in the world adapt the quickest, right? So whatever the market conditions are, it's adapting the quicker. The quicker you adapt, the more money you save from losing and the more money you can make. What I've noticed lately is that stocks are entering a bear market phase, at least for now. I'm not saying that it's a bear market yet, but what we're seeing is when stocks have bad news, they don't bounce much and they continue lower. We saw it on Dollar General recently with it just basically going down 3 straight days with almost no bounces along the way. Lots of these other stocks are doing this. So just be aware that this is a level, but it's a very high risk level. Now, if we continue down, what's our next point of interest to the downside? The next big level, the one that I would start getting more interested in, would be around 137 to 138. That, again, to me, is a very solid level. So we can see the level appearing right here. And what we're seeing is this pivot point here, right through, and right into this zone right there. All right, so again, that would be a little bit more interesting to me as a level today, more oversold, maybe a technical bounce. In terms of a swing trade, where would I start to be interested? For those of you that aren't day traders, you might be interested in a swing trading level. For that, what we have to do is we have to zoom way out. And what we're going to do is we're going to look at the chart and take our trend lines going all the way back to the March 2020 low, which was the COVID low. And basically what I'm looking at here, guys, is a level. There's a zone right down here. There's a gap fill and a trend line. All right, so if you guys can see this, I don't know if you guys can see this, but there's a trend line going back to March of 2020 that goes right through this low here. There's also a gap fill, and basically $100 to $90, that would be my swing trade level. Now, many of you are probably sitting there saying, you know, wow, that's so far away. Well, it seems like it's so far away, but if you have the stock already trading down at 160, let's say it closes at 150 or 140 today, and then let's say we get another sell-off like we saw in early August, this stock could be there in a matter of weeks into that level. And remember, that's the key, folks. Be patient, be disciplined. That's how you ultimately make good decisions. Don't react emotionally to big moves in stocks. You have to look at the technicals and decide what is best based on that information, not based on emotion. Next up, let's take a look at PagerDuty here. PagerDuty taking a beating. Beautiful drop on PagerDuty this morning. Closed yesterday right up in this range, looks like right around 119.70 or 1978, trading at around 116.50. It has bounced a little bit off the lows. This is not a big company, so just be aware it carries a little bit more risk. But if we look at the chart here and we zoom out, what do we see here? Well, we see that overall there's actually not a lot down here. I don't see a level. The only levels I have here, there's a level at 14.75 to 15 bucks, a gap fill, and then the level from March 2020. Isn't it amazing how many stocks are moving back towards these lows of COVID? I mean, that's just not a good economic sign when you're seeing that. But basically what we're looking at here, guys, is 14.75 to 15, and then approximately 12.75 right there. Well, actually, it's closer to $12 right in that vicinity. The lower one would be a swing trade level. The upper one probably just a day trade level. Okay, let's keep going because there's other stocks moving this morning. Dick's Sporting Goods had earnings, and that stock, again, unchanged. So, again, anytime we see a stock that's relatively sideways chop, we don't need to mess with it, right? There's no reason to force a trade when you don't have enough volatility. What most traders do is they look and they force themselves to find a trade in something because they're bored, because they want the adrenaline rush. Good professional traders, they actually look for a reason not to take a trade. So what you would say is that, okay, well, find a reason on a chart not to take a trade. It's a very weird mentality change, but you want to look for any sort of reason that kind of breaks your thesis. Because what most people do is they figure out, they make up reasons to fit their thesis. And that's why we get into bad trades, is we're just forcing things. Let the trade come to you. I always say to the live trading room is like, instead, a trade should literally pop off the chart and almost smack you in the face, right? It should be so obvious that you're like, holy cow, 3-4 factors here. This is a no-brainer. If it's a no-brainer, it's worth a small position. And then you leave a little dry powder to move into that next portion if you need to. All right, next up, Dollar Tree reporting earnings. Remember, Dollar General had a nasty report last week, or it might have been the week before, but either way, nasty report. And we are seeing Dollar General catching up to the fall on, Dollar Tree catching up to the fall on Dollar General. Now, Dollar General broke down 33% on earnings. It's down probably close to 40% since then, so meaning that it fell 33%, another 7% since then. Dollar Tree did not fall that much, but now it's playing catch up. So to be honest, Dollar General might have downside to 80 to 81. I actually like it a lot in this range. Dollar Tree here, DLTR, may still have a little further downside to play catch up to that Dollar General fall. But again, this is what I said before. I said, listen, low-end consumers, low-income consumers, they are struggling to even afford Dollar Tree or Dollar General. Yes, you could say Walmart's taking a little of their lunch. That's probably partially true too. But you have this disparity where you have the low income have just been crushed by inflation. The high income that have investments, they've been enjoying the stock market going up precipitously, so they're doing fine, and they're still shopping at the higher end places out there, Sprouts and other places like that for food and other goods. And so you have this kind of, usually when you get in a recession, the low end is struggling even more, but then some of the mid-level, they come down to a Dollar Tree. That hasn't happened now. because of that kind of disparity in income due to the stock market. That should change, which makes me intrigued. The lower these stocks get, the Dollar Trees and so on, I also think that you might even get an activist investor to step in here, or maybe even a merger between Dollar Tree and Dollar General would be an interesting way to go. So there is something that's going on here that I think if these get low enough, there is an interesting opportunity. All right, guys. Having said that, we're going to do our spin for our Wheel of Appreciation here. Let's get up here and do that now as we get through it. Again, yesterday we had, I believe it was NordVPN was the winner yesterday, so we'll go in it. But there's going to be a change today, folks. So I'm making a change today, and I'm going to go over this with you guys. So right here, we're going to give away the NordVPN, Rezarlak, right there. Congratulations. Reach out to support@verifiedinvesting.com. But now let me unveil the new breakdown here. All right, so what we're going to do is we're going to change this. You don't have to share the content. You can share it if you want. Don't worry about that. But we're making a change. And the change is going to be for the next 2 days. So from today and Thursday, I want you guys to post up a reasoning, a trade that you guys have found in stocks, crypto, or commodities that fits multiple factors. I want to find a trade that you guys give me that I end up taking. And so if you guys have been following the game plans, if you know the methodology, we know scene of the crime retrace, we know confirmation, we know hits of trend lines, resistance supports, gap fills, all of these things that I go over. I want you guys to tell me a trade. And what I'm going to do is I'm going to go through the comments and I'm going to look at these and I'm going to select one on Friday to give away a major prize on the wheel. I'll do a pick of the prize. I'll maybe unveil that pick tomorrow, but that's what we're going to do here. So basically what I want to do is I want to see your knowledge. I want to see how much you guys have learned from these game plans. So I want you guys, again, to post a trade setup based, and you have to tell me the criteria, right? I want to know what the factors are. So what's the trade and what's the factors? I will go through them. I will select one that I think is the best. Maybe I'll even take that trade, and then you will win a prize, and I will unveil that on Friday in the game plan. All right, hope we made that clear. All right, so we're not going to spin the wheel today because I'm going to spin that on Friday to give that away, and it's going to be a major prize, not a minor prize there, so it should be pretty exciting. But let's quickly, and again, folks, as we get back into the charts, we're going to jump into crypto, but let's quickly go over here, and we're going to take 30 seconds quickly to thank LuxAlgo for being our sponsor. And don't forget, guys, I have had it on my charts over here, but we have the signals. I have that indicator on LuxAlgo that's available on TradingView. I showed it to you guys last week. I'll show it to you again maybe in just a minute. But it is a beautiful indicator telling us for bottoming and topping signals when charts are ready to reverse. It also gives your achieved target price. When it hits, it tells you it's been achieved, then target number 2, and it also tells you when the pattern or formation fails. So it's really an all-in-one type of situation, and ultimately it will help you become a better investor and trader. Works on any time frame, any chart. All right, take it away. Let's watch.
Have you considered enhancing your trading experience? We have an amazing tool for you. LuxAlgo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. LuxAlgo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with LuxAlgo. Please visit the description below and sign up for LuxAlgo today.
All right, guys, we're back, and I'm just flipping into Bitcoin here so we can take a look at Bitcoin and what it's up to. Basically, Bitcoin did play a little catch up with the market sell in the overnight. We can see that Bitcoin is starting to move lower. But again, should this be any surprise to you guys whatsoever? The answer is no, right? Because we continue to be below the pivot line. As long as you're below the pivot line, what did we say? Probabilities, which is everything we do here. Technical analysis, data analysis is all about probabilities. It favors a move here. Okay, now part of me hopes it fails, and I hope we see a move up above the pivot line, but the charts are the charts. If it's below, it's just a negative bias. It has nothing to do with my personal preference. Heck, I love Bitcoin for the long-term investment, but it doesn't mean that I can force my opinions on the chart, right? You have to let the chart do its thing, and that means that this is your key technical support level. All right, so let's watch that very closely. And just a reminder, folks, what's pretty cool here, if we zoom out on this, we can see that, again, Here's the LuxAlgo indicator on Bitcoin. You can see that it popped up right here with the sell signal, and then there was your target one. Let me bring that up here. So this is going back to early 2024. There was that signal on the daily chart. Target one achieved, target two achieved right there. And then there's even another one back here a little bit more that we can see right here. Let's bring it back here, and then we can see right there. Look at that. Beautiful signal right there. We can see very clearly the sell signal appeared in real time. And by the way, you can go back and use this tool where you replay, and you can go back and you can see it pop up. Pops up, that's your signal right there. Then we come down, target one achieved, target two achieved. And again, you can go through almost any charts, and you'll see some that fail. It's not perfect. There's nothing in trading that's perfect, but it's all about the probability. And if you can find a signal that gives you at least a solid win rate, that's all you need in trading to really make a difference in your trading techniques. All right, so just keep that in mind. Let's look at oil here. And by the way, there's on oil, we can clearly see there was that signal as well. Your buy signal on oil right here via the LuxAlgo indicator. And then right here, target one, target two right there, about as perfect as can be as that played out. And by the way, just to go into it real quick, if we go to verified investing, I always like to show you guys because I know it's a little complex to figure out where it is. But if you just go up to the AI Algo tab right up here, right there, all right, right there, Gareth Soloway LuxAlgo reversal signal. That's where you find it. It's only like 30, I think it's only like 30 bucks. Let me click on 20. It's even cheaper than I thought. $24.99. Can't beat that. That's awesome, guys. Very, very cool. So there you go. Right there, you can see that. All right, so Bitcoin, again, in a weaker position right now, but let's go to oil and see what oil is showing us. Now, this is an interesting one because with oil, what we saw was, all right, and by the way, there's that indicator on there. We'll leave it up for now. But basically, this morning, there was this chatter out. So oil was trading lower on the day, and by the way, it's still lower, but OPEC came out and said, hey, we might be rethinking our supply increases. All right, so what did we see? We saw an immediate reaction pre-market here on oil. Oil spiked up to about 71 and change. This is what always happens. They see the breakdown. They see the major technical breakdown occurring here. I mean, heck, they probably know I'm short, right? It is what it is. But ultimately, what we're seeing here is the breakdown on oil, and notice how it initially popped, and now it's giving it up. This always happens. They always try to come out and reinforce and lift it up, but everyone knows their game. It's like, listen, they talk a strong game, and they're not going to start cutting back oil anymore. They're not going to do it. They need the money. They need the money to keep everything copacetic over there in the Middle East. And so ultimately what's going to happen is we're going to see the move to the downside continue, and you should see this break down because the power of slower economies is much greater than a small supply cut or even the threat of a small supply cut. So I continue to hold my short here, guys. I will say if it continues to drop, there's a level between 67 and 68. I might take profits. Again, I shorted up here at around 77, so that would be a pretty solid gain should we get there. Looking at gold real quick, gold is coming in just a little bit right here. You can see right here, guys, look at this. So this is a good example. I think I showed you guys this last week as well, but here's a situation where you had a sell signal on gold. It came up, and it was negated right over here. You actually were in the money. You almost hit target number one, but look, it didn't achieve. So that's okay. That's the nature of it, right? I always want to be clear with you guys. Nothing's perfect, right? Nothing's perfect. I have bad trades. The algo that I created will occasionally be at fault. But look at this. How big was your loss, right? Here's your sell signal. Here's your stop out right up here, right? So basically on this close above. So you get a tiny little loss. You move on. Move on to the next trade. It's all about a numbers game. Always remember that when it comes to these signals out there. And that goes for everything on our website as well, Verified Investing. Nothing's going to be perfect. All right, so gold is inching down a little bit here. I don't really see anything of interest here other than that I still continue to see a negative bias on this chart. Not a big negative bias, but just short term, maybe coming back to the low 2400s in the meantime. Watch that jobs number on Friday because it will determine what price action does. Let's look at silver. See what we got on silver here, and silver continues to be right at support. We do have this support level here. Silver's actually fractionally up today, but again, silver is being forced down based on the industrial output view, meaning that as the economy looks to slow, that's going to hurt silver. I still think silver's a possible buy down here once it gets into the 26.5 level or so, but just be understanding that it's not a gold. Silver's not gold. I know people want it to be, it's cheaper, it seems like, oh, it's a better deal. It's still viewed not in the same way. There's half industrial, half store of safety versus gold is 100% store of safety. All right, so lastly, guys, really quickly here, natural gas, which actually had a nice move up by the end of the day yesterday. And on the natural gas chart here, we can see it's continuing to push up. So that's pretty cool. All right, so again, there it is, pushing up a little bit here on the day. We can see it's pushing right through there. That's okay. This isn't a breakout that you're buying. You never buy a breakout that has multiple, like 2, 4, 6 green candles in a row. And number one, it hasn't even closed above, let alone confirmed. What I would do is I would consider shorting this level. This level is your midpoint right here. And again, we can clearly see that that is a resistance point. Speaking of which, here's that sell signal on natural gas. Hit target 1, then it came out and it stopped out right there. So it took a little bit of your initial profit away, but not by much. Overall, a net positive win on that one right there. But in any case, going to natural gas, guys, I'm hopeful it continues up, because if it goes straight up into this level, huge overbought scenario into major resistance, you would expect a check back. Probabilities would dictate that. All right, I got to get going, guys. I got to get to the trading room. As always, don't forget, we have one-day passes and weekly passes to the live day trading room. So if you have a 1 week off where you're like, hey, I'm going to be sitting around, come on in. Learn with us, trade with us. It's awesome. The Apex Live Day Trading Room at verifiedinvesting.com. You guys have a great one. I'll see you next time.